Okay, hey everyone, it's Michael Baltos here, and welcome to the Orderflows Market Analysis for Wednesday, May 3rd, 2017. There was no change, no surprise from the Federal Reserve, and they held rates steady and downplayed how slow first quarter consumer spending was, also saying the fundamentals point to a snapback. I think the big surprise was the market did absolutely nothing. Usually you got very little movement. You got maybe moved a point in the S&Ps and maybe 5 or 6 ticks in the bonds. So to me, that was the big surprise. Actually, I mean, normally you'd get a little bit more activity, a little bit more volatility in the market. But again, this is a big week in terms of what you got coming out. The House passed the spending bill, keeping the government open until September. Obviously, you got non-farm payrolls on Friday. And you got the French election on Sunday, and also you throw in a boatload of Fed speakers on Friday. Janet Yellen speaking, obviously is the main one, but I was a bit surprised. The market did basically a belly flop in the sense that it did nothing, but that happens sometimes. So again, before we get started, get through the disclaimer. This presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and it's not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that could be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. The tools I'm going to use in this presentation are mainly the Order Flows Trader, the footprint chart, the Delta Scalper, and the Delta Surge. Delta Surge you can download for free on my website. It runs on NinjaTrader 7. And let's jump right in here. First, we'll start with the S&Ps, the 4-range chart, and there was something a little bit interesting before the the Fed announcement, but just really quick, 1 o'clock Chicago time was the Fed announcement, and this is it right here. Nothing happened, basically. Very quiet. Compared, in the bonds, you did get a little bit of movement. Where's my bond chart here? Dragging it in. Here's the bond chart, and looking at time 1 o'clock here. This is the announcement. So you got a little bit of a flurry of activity. Not much. You can just see the thin volumes in these bars. You're trading a couple hundred, 200, 400, 500, 400, 400, 400, 300 before people started coming back into the market. And then you're back up to your normal volumes, 1,000, 5,000, 1,000, 2,000. So anyway, that said, I'll talk about bonds a little bit later, but for now, I'll talk about S&Ps real quick. Now, been a quiet morning, and actually this is the wrong. That's my. Okay, just really quick. NinjaTrader 7. One of the drawbacks of NinjaTrader 7 is, when you're reading the order flow, right? When you have the software on there, it reads the data as it comes in. The reason I have this chart open is because someone was saying, hey, my charts are different than yours, is because they open their charts around at a certain time, whereas my charts are open up much earlier in the day. And as a result, I got the data coming in. The software reads the data as it comes in, so it doesn't plot the historical data. That was there. I mean, it does, but it's not accurate, and that's a limitation in NinjaTrader 7, unfortunately. This is that's why we want to go back here. Just really quick. Like for example, this low that was here at 831. For example, this chart on the right is the chart that was open basically from 3 in the morning. So that's why you see this data is accurate. I know this one is not, because I know my chart wasn't open at this time, and it's trying to read the data properly, but it doesn't. So you see 65 on the low, 65, 2600 here is 2100, or against 826, this is 299. That's just a limitation of NinjaTrader 7. But once your chart is open, data's coming in, the data is accurate. Okay, and to be honest, when you're using a footprint chart, you're not, when it's 10 o'clock, you're not concerned with what happened at the actual order flow that happened at 4 in the morning. So it's not necessarily something that you need. I mean, that's why people ask me, when do you start your charts? Well, I start them. I used to keep my software on, or my computer on, from Sunday until Saturday or till Friday night, but I've changed it. I turned my computer off for a couple hours at night. So basically, my computer runs from about 3 a.m. Chicago time, the data, collecting the data from 3 a.m. until the evening session. I don't put much into the Asian session, especially, I worked in Asia for many years, 10 years about, and I know decent volume goes through, but you know what? It's 20%, if that, 10% more likely of the day's volume occurs during the Asian session. So if I have to cut out a time of the day to save data, it would be during that session. But if you keep it on all week, your system, by all means do it. If you can't, you'd want to start it as early as you could in the European session. So that's just a brief thoughts on that. So really the big thing here in the S&Ps this morning was we had we had made our low at this point at 9:11 a.m. Chicago time, at this 2379 level, and started rallying up from it. And then you got up here at 82, which was your point of control for the day at that point. And in the bars, you have your point of controls also lined up there. You got 4 point of controls right in a row. And for me, how you look at that is, well, you talk about market generated levels. This is a market generated level here. You've got a resistance level here, or if we're going to be below it. We came out in this bar here, this next bar, well below it. So I'm thinking, I'm looking at this. This is going to be my resistance level. If this was a green bar and we're trading above it, this would be my support level. But for now, we're below it. This is my resistance level. I even said it, in the room, looking at this as being if we come out, start trading lower, clearly below it, this is going to be a resistance level. And what happens? We finish this bar down at 87 3/4, at 80 3/4. Next bar down as well. So I'm pretty convinced at this point that this is going to be my support level. So if you want to get short, you can definitely be getting short anywhere between 80 and 81. Honestly, in this bar here, it's when we're trading towards the bottom, I'm pretty convinced already that that's going to be holding. When you see this new lower point of control here, you already got 2 bars coming off this level. I'm already convinced that this is a support level. And we just, so if you're getting short anywhere around this 80 level, even in this bar here, it's a bit late. Again, it's right off the low though. We trade down. So if you're getting short from 80, we get down as low as 75.5 before we sort of bounce up again here to 76.5, 77, and we got the Delta Scalper giving a buy here right off this low. We rallied back up to the 80s. So this Delta Scalper was a nice signal as well. Come back up. You get the Delta Scalper here, but we're trading back up at 82. We're trading back up at your point of control for the day. You get a couple stacked imbalances here. Okay. Now, when you have stacked imbalances, okay, where do you want to take them? Ideally, you should be taking them at edges of the day. Value area highs, value area lows, highs of the day, highs of lows of the day, swing highs, swing lows, not in the middle of value, not in the middle of your day's point of control. And why? Because I say this many times, you could have the best indicator in the world, but if you're trading in an area of consolidation, and generally your value area is where you're consolidating, a market going sideways, or you have absorption, trading is being absorbed, it's not going to be a very effective signal. I said you could have the best thing. You know, I got this system that works 98% of the time. Well, the 2% of the time it fails often is in an area where the market's going sideways. And why? You know, why do I say that? Is because, you know, think about how markets move. Markets move from value area to value area, right? The purpose of a market is to find value. And once it starts rejecting the value area, it's going to move to another value area. So when you're trading in the middle of the value area, that's what the market's supposed to be doing. It's supposed to be trading there. So the big guys, you know, the commercials, the producers, the hedgers can trade without moving the market. So, you know, if you start moving away from the value area, then, you know, then pay attention to see what's, you know, if there's signs that you are going to be moving away from that value area. So again, you know, coming into this, you know, so again, that's why I'm not so interested. You know, even though, you know, you do have a overlap stacked selling imbalance here, you know, again, I do like that. I do like when you get them overlapped, one right after the other. It is actually quite a very high percentage trade, and it comes off a bit. But again, you know, you're coming into the Fed announcement, so, you know, you're probably not going to be really interested in taking any trades. You know, we start to rally after the Fed announcement. This is the Delta surge again. You know, I'm not too keen on taking anything around the Fed announcement. Eventually, then you start coming off, you know, ratio, stacked imbalance. You get a little bit of a pullback. It's just, you know, again, it's kind of a goofy day in the sense that the market didn't really react much to the Fed. But, you know, those days happen. I mean, I don't know. Maybe hopefully one day the Fed will be abolished by Trump, and we'll see what's going to happen. And, you know, in the evening session, we're trading a bit higher right now. So, you know, on the daily chart, how did it end up? Well, this is today. You know, we had this candle. You know, we did get the probe lower. We did break out through the low 2 days ago, but we rallied back up inside, and, you know, and got up here back up to the 82.5 area. Right now in the evening session, we are trading a bit higher. Okay, so next, let's look at bonds. Oh, take a look at 5 years first. Again, you know, 5 years, you know, short-term, I'll say short-term interest rate. 5 years aren't really, you know, 5 years is not short-term, but, you know, the shorter you go in the curve, you know, the more you can see the price action compared to the bonds. Okay, so where am I? Going back here, 7 o'clock. It's a little bit bigger. So, yeah, there's a few things, right? 7:30. I mean, you did have, I forgot what numbers came out already, but you did have a number come out at 7:30, and you did get a bounce. You got the Delta Scalper. You've got a divergence here. You can, again, point of control near the bottom, but again, you know, 7:30. I'm not too interested in that time. You know, then we start working our way back down. You know, you get a few things. I like this. You know, that's why the software draws this arrow here. It's for a nice short-term trade. And what it is, you know, it's a buying imbalance at the top of the bar. You know, you got a ratio up there as well. And it's good for, you know, a minimum a few ticks. And you do get a little bit of a move down here. It's not the greatest move. You come down here right at the low of the day, make a new low. But right at the previous low of the day, you got point of controls right at the bottom. So I know there is some volume down there stopping this move. And then here, this move up was quite interesting. You know, you got this big negative delta through minus 3,000, but look at the bar. It's going higher. It's going higher. Why? Is because you have supportive buying in here. 5,000 here, 2,600, 2,100, even up here 2,800. You know, you could be if you're looking at that. You know, again, you see the negative delta at 3,000. You think, hey, we should be trading lower. Why are we trading higher? It's usually a nice little. It's a sign. It's a sign to you that, you know, there is supportive buying. You know, there's people selling into these bids, but there's just someone standing there saying, you know, sell me more, sell me more. I'm happy to buy down here. And, you know, eventually the sellers lose interest, right? Because how do you get the negative delta, right? How do you get a delta, right? I mean, if someone sells into the bid, that's -1. If someone buys the offer, that's +1. So, you know, there's more selling into this bid than buying from the offer. So when the sellers get tired, the market starts working its way up. and we get a nice little rally up there. This is the you get this high here with a single print. Okay, is it a big move? Not really. And again, it's right at your well, at the time I believe it was right around your point of control. A little bit later we changed it, and then we were just sort of going here, drifting sideways. We make a new low, around the 9.25 level. Not much in here really in the order flow to get excited about. Then you get this stacked buying imbalance here right off the low. The low is this red line at 9.25. This is coming in around 10.5 to 11, and you get a ratio in the next bar. This is how I like to get them, and you got a nice little bit of a move up here. But again, it was a slow move. You're talking, this is at 10:40, this bar, and all of a sudden it's 1 o'clock up here again. So if you're in a position, you don't want to be in the position right as the Fed's going to be making an announcement. You'd get out. But honestly, that's how much the market slowed down from 10 until 1 o'clock. You could see it's just 4 bars going nowhere, going a little bit higher before the 1 o'clock announcement, and then you can see how the market reacted. It's kind of jumping all over the place. Again, I'm not really interested in trading around this time. That's why I'm not talking about it. People say, oh, the sale, these things didn't work out. It's stacked and balance, it failed. But yeah, I say, yeah, that failed, but it came right back with a bullish ratio right on the low. Again, Delta Scalper up there at the swing high, and you sold off nicely down into new lows. Let's see what other goodies there are. I'll look at the bonds now if I can find my chart. Here it is. Okay, let's just go back here. There wasn't much happening in the bonds either this morning, honestly. So we had this low again at 7:30. Low with actually it came from 7 this morning. You had a high with a divergence. Now this high here, it is a high. It's point of control up near the top. It's a ratio bounds low as well, but there's just fuck all volume. At this time, 7 in the morning. Look at this range, 24. Here was 24 to what is that, 153.01. You're talking, was that a 7 tick range coming in. Granted, it was a holiday in Japan, in Hong Kong. Japan, this is where the cash U.S. bonds. There's cash U.S. bond market in Japan. So when Japan is closed, bonds are really quiet. Okay, and Hong Kong was also closed. Korea was closed for what it's worth as well. But the big one is Japan being closed. And I know from my own experience, when Japan is closed and Hong Kong is closed, it's really quiet in the markets during the Asian session. In the U.S. markets, obviously it's quiet in the Japanese and Asian markets, but U.S. markets especially quiet. You don't get much movement, so keep that in mind if you're trading U.S. products. When during Japan holidays, you're better off just watching TV or something. But so we have this high here, 7:15 this morning. We had this very tight range. Okay, is it actionable? I'd like, if I get a ratio, yeah, it is. I'd like to get a some sort of sign. Now again, if you're looking at some sort of setup, the O2 setup that I talked about before, which gives you a low risk trade, this is it. But unfortunately, it got 2 ticks up there before it made its move, so it would have stopped you out, with the 1 tick stop up here, or sorry, 1 tick behind the high here. The O2 would be this high. You're getting short, right around here at this level. Came back up, got 2 ticks up, and then made the move. That happens. Ideally, I would have liked it to stop at that level, get this ratio and divergence, and then make the move. So anyway, if it stopped you out, it's not the end of the world. You got another trade set up right here. You got a divergence and a ratio, 720, and it makes this move from the high right down into the low. So whatever you lost on this trade, people say, oh, it failed, you suck. Yeah, that's trading. Sometimes trades don't work out. Get over it. And then the next one happens immediately after, right after you get stopped. You got another sign up here to be getting short, and this time you're getting short, we'll call it 153 even. You get all the way down to new lows, 152.24, and even lower. And then you get a buy signal this time. You get a divergence with a ratio, granted it's at 730. I'm not sure you'd be taking it, but then it shoots right back all the way up to new highs. So So I got nothing else to say about that. People throw stones at me, say, oh, this one failed, and then they overlook, the times that this one worked or that one worked. So, those were the very interesting trades early in the bonds. This one here, you have this swing high. We got up within a couple of ticks of the high. This was after a move. We had hit that high there, sold off, and we're just we got this price rejected, giving a buy there. Then you trade up here. There's a ratio, 2 ticks off the high. This is the U-turn given a sell here. Then you get the delta scalper here. Honestly, I thought this market could start to sell off. It didn't. It just came right back with positive delta, which was stronger than the previous bar. The next bar, doji. It just wasn't, it just wasn't happening. I expected a sell-off there. It didn't happen. Came right back up within 1 tick of the high, and then just started going sideways, and then going a bit lower. But really, I did expect something off this move here. And then you come in at 12 o'clock again. It's at this point it's lunchtime, and you got an announcement coming out. You're probably not interested in taking this trade. Even though it does, the next bar go lower, you got another bullish sign here, which goes up. This is the U-turn as well, and it sort of works its way back up. So if you're taking this trade, you could have most likely would have scratched it. Again, I probably would not. 12.25 definitely would not be looking to take any trade, because if you're going to be holding it for 30 minutes, you're going to be going into the announcement. And the announcement came off. Eventually, late in the day, we sold off, and in the evening session, we're a little bit lower. All right, now let's take a look at beans. Beans. Again, I put beans in there for a number of reasons. One, I think beans are a great contract for trading. And two, I don't want to focus. People think that only order flow analysis only works on certain markets. Beans are pretty much uncorrelated to bonds or S&Ps, even though generally things move in the same direction. In a bull market, but beans can be they've got completely different fundamentals than bonds and than equities. So 8:30, 8:30 is the reopen that coincides with the old floor hours. And just taking a look at some of these things we got. Again, you got a stack buying imbalance. 8:31. It's right after the open. Can you take it? Yeah, you can. You get a little bit of a move, but again, I still consider that part of the opening. Excuse me, the opening period. And then you start rallying here. Again, you get another stack buying imbalance this time. 8:46. Okay, right into the high of the day. And let me ask you, would you rather, can the market go higher? Yes, it can. Or would you rather be taking, here's the stack selling imbalance. Honestly, I'd rather be taking the stack selling imbalance off at the high than the stack buying imbalance. That's me. In this case, we just went sideways and went higher, so that would have stopped you up. But it is at this high here. It's interesting because this bar, I got a lot of negative signs up here. I got a stacked imbalance. I got this red arrow, which tells me there's a buying imbalance there. I've got a ratio balance low, point of control at the top. There was a lot of bearish signs up there at that high, and we came back and we didn't go lower. And to me, that's a sign as well. When I'm staring at something extremely negative and the market doesn't sell off, that sort of gives me a sign that rethink what's going on here. Then what happens is we get up here, we make a new high. Again, you got something similar this time. You got a divergence, you got the negative delta, you got a ratio balance low, point of control again right up near the top, and then it comes right back up. So really, I'm seeing this and we can't sell off. I'm like wondering what's going on, and we're just trading sideways, and then you start to sell off a bit later. Up here, there's nothing really to tell me to get shorted. This is the U-turn here. There's also a U-turn there. But again, the only takeaway is, if you're looking up here, you see the volume numbers. 555, 207. Here's another 500, 400, 700, 500. 300. So I know there is some volume up here at these highs, and does the market react off it? Eventually it does sell off. You come down into the swing low, you got the price rejector, giving a buy again. Here you've got the green arrow, with the selling imbalance down there and a ratio. So you got a few things going on here, and you get a nice little move up. This is the delta scalper. This one doesn't work, and you get back up to these highs again where you got the heavy volume the second time. You can see you got this, even have these buying imbalances towards the top. This is what I call a split buying imbalance, where it's a buying imbalance split over 2 bars. But again, it's at the high of the day. Do you want to keep buying at the high of the day, or would you rather be looking for a sell? And again, this red arrow is telling me there's a potential little selling opportunity. We do sell off. We do test that high. We don't get past it. We test it, come back down again before rallying back up. So honestly, I do feel that this market, on sort of I hate to say a longer term frame, but every time we get up to the high, I see a lot of negative signs up here. Even going back up to this 974 level, and the market can't really sell off. And then again, you get back up to that 974, 975 level, very, it still looks bearish, and you can't really sell off. And in the end, you keep making new highs. And, sort of right now in the evening session, we're trading, still around that level. So I'll be curious to see how it plays out the next day, on Thursday. Now, let's see. What other market here? Just crude oil. Crude oil. So crude oil, yeah, the inventory numbers come out today. So I know there's going to be some activity in the market. So again, crude oil, 4 in the morning. Crude oil trades decent volume during the European session. Around 4 in the morning is the old IPE floor out at 4 a.m. When I say 4 in the morning, I'm talking about Chicago time. 4 a.m. Chicago time is around when the old, for you old timers, IPE, when Brent crude, the pit hours used to start. And surprisingly, that's still when you get a lot of volume, when volume really picks up. But anyway, you've got, 4 o'clock, you got this high in the crude oil, and then immediately afterward you get the delta scalper giving a nice sell. It's a nice little move down, lower, and then you get down here, you have stacked imbalance, but it's going into the low. I mean, you do get a little something out of it. Start rallying back up, delta scalper giving a little bit of a buy there. Again, then you start coming into these lows here. Boom, you make a new low, ratio bounds low, the divergence. In the next bar you get a buying imbalance, delta scalper. It just, the bar comes up, but it's a red bar. So, are you interested in taking? Just like here, you have the delta surge. You see the delta increasing, but the price action of the bars are still lower. Again, if you're looking to be taking buys, you should be taking buys on candles that are green, candles that are closing higher than where they opened. You get down to the low. This is the Valtos U-turn down here on the low for finding reversals. Just really quick, is it any good? Well, this one didn't really work. This one didn't work. What else was there? There was a few more. Like this one worked here. I don't think this was one, but you can see it works. It's decent at finding reversals. So anyway, 9:30 inventory numbers come out. That's why you see this market in a fast market condition. You're literally talking moves from this is 4,800 down to 47, 46, all within 15 seconds. Let this market calm down a bit before really putting on your thinking cap for analysis. Then we get to this bar here, 943. This was interesting. Big negative delta, 1,200. It's your biggest negative delta of the morning, I believe. And it just runs into this thing. Point of control though is up in the middle of the bar, but there's some decent volume down here. 515, 377, 281. You got a couple selling imbalances down there, and you do have the delta surge kicking off. But again, it's delta surge going into the low, and it's delta surge sell, and you have the bar that's closing higher. Not going to be very wise to be taking a sell there. I got a lot more bullish things going on here than anything else, and the market shoots up. Quite nicely from this low at around the 40s all the way up into the 70s. Comes off again. Again, talking about taking delta surge. No, it's actually the delta surge here and the delta scalper given buys here. I know this is a delta surge by looking at the numbers, and I know this is the price delta scalper just by also looking at the numbers, but I can see the colors here. It doesn't look blue as per normal because it's blue and green mixed together. And it's given a nice little buy here. It just shoots straight up here. Again, that's what I talk about. If you're taking, signals, buy signals, the bar should be green, right? Not, like taking the sell signal with a green bar. You should be taking a sell signal with a red bar, just as you're taking buy signals with green bars, bars that close higher. I mean, what's the point of taking a buy if the bar itself that's giving you the signal doesn't even close higher? So, anyway, we shoot up quite nicely from here, from this 50 area all the way up into, again, it didn't get up to 4,800, but it got up to, 48, 47, 80s, 47, 90s before, given a sign. This is the price rejector coming off. Again, it's only 10 in the morning, so it's quite a busy morning in the crude. Again, we get this nice little rally here. And then again, this is the delta scalper, but it's given a buy. Okay, it's a green candle. Okay, I'd bite. Didn't work. It just came right back out and stopped you out. That's life. So I took the trade. I had a losing trade. It sucks. Well, it's a numbers game. It's like dating. You got to date different women before you find the one. So what can you do? It's not everybody has the fortune of finding their wife or finding their spouse on their first date. This is the price delta scalper. Again, gives a sell. It does sell off a little bit before you get a bullish signal here with this U-turn here. We rally up, get up here, aggressive buying coming in here. Again, we're making another run up at 4,800. So people, I think, are getting a little bit antsy, thinking, hey, we got to get this move up to $48 and go higher. That's why you see these aggressives. And then it starts selling off again. And so all these people that were buying it aggressively here are looking to sell. They realize, hey, what, we're not going to get up to $48. And these buyers turn sellers, and it starts selling off here. You got the delta scalper giving a signal here. You got the delta surge giving a signal there. Then it sort of hits this low area back down into 47.60. It's a decent move. It's from 47.80 down to 47.60. And then again, 1 o'clock Fed announcement. And it is going to affect oil, whether you like to admit it or not. Then the markets go sideways for a while before shooting back up here. 1 o'clock. And, again, 1:30, it's just, you're getting, some bullish and bearish sign, bearish sign. You get, there's one bullish in here. This is the price delta scalper. You got the stacked imbalance. Again, the one nice thing about the stacked imbalance is you got the ratio afterwards. I always say, look for the stacked imbalances with the ratio afterwards. You didn't get much of a move, just kind of, sideways a little bit lower. This is the delta scalper that gave a buy. It didn't work out, but, it came right back. So, if you're short from here, you run into this bar here, it gives you a buy. And then you get a bearish signal here, followed up with another bearish signal here. And you can see the market, unfortunately, you got these point of controls all just sort of lining up before you make the move lower. But, honestly, by 3 o'clock, you're not going to be looking to still be trading crude oil, especially after how much activity there was earlier that day. At this point, you're a bit exhausted from looking at crude. So anyway, it's this. I'm not going to talk about euro currency because, well, fuck it. I'll talk about euro currency. I don't want to say I'll talk about it, but I'll try to keep these videos around 30 minutes, and I'm already over 30 minutes. But what the hell? Again, this is the 1 o'clock. This is when the Fed announcement came out. You can see the only market that didn't budge was really the equity market. And I really think I said there's just so much on the equity traders' plates as far as things coming out this week that maybe they're just waiting to see. They don't really want to go all in on anything until they got a better grasp of what the hell is going on with this president. And obviously the elections in Europe because even JP Morgan is talking now about moving 4,000 staff out of London, and these other banks are also talking about moving staff out of London. Sort of makes me still wish I was working at JP Morgan or in London, then I'd probably get a nice package. But actually, JP Morgan's gotten a lot cheaper over the years. Unless you're like a super senior executive, you don't get the big expat packages anymore. They localize you and just pay you local rates. The days of the high flying expat are mostly over for most people. I mean, some companies, they still give it, but in general, most companies nowadays, especially JP Morgan, everyone thinks, oh, JP Morgan bank's so rich. No, they're fucking cheap motherfuckers. I said, unless you're a super senior executive, then they just fucking lowball you. You think, just be happy to have a job and you're working at in such a great place like JP Morgan. You have the name on your resume. Fuck that, But anyway, I digress. It's my little bit of a rant today. So anyway, Euro currency, you'll take a look at from 7 o'clock. People say, oh, you're looking for 7 just because you have a signal there. Okay, well, fuck you. I'll go back here. And, going back to 4 in the morning, again, you did have a decent range. From 109.61.5 down to 31, so about a 30-point range in the euro currency coming into around 4 in the morning. You get these divergences here, with no ratios. Again, you do have the delta scalper given a buy here, but it's on a red bar. I'm not interested. You get it a little bit later here. It's a green bar, okay, but it still hasn't necessarily found its low yet. You do come down here, make a new low. It's just going sideways at this point. I mean, compare this market to the other markets, honestly, and overall, this euro currency did have movement. The other markets weren't doing anything. So, I know people will say, well, I want to trade the market that's moving, and they'll look at the euro currency, but it's a false trap. The markets in general should be moving, all markets, rather than bonds very tight range, 5 years tight range, S&P's tight range. Don't think all of a sudden, I found the one market where things are moving, I'm going to trade that. No. It's going to be directionless also. And what I mean by directionless is not a whole lot of trades. Not a whole lot of trends. So anyway, coming into the U.S. hours, where you would expect things to pick up, and they do. You rally back up to almost 50, get up to 48. Start coming off, Delta scalper giving a sell there. It comes off a little bit, rallies back up, Again, if you're not trailing your stop, you probably would have been stopped out there, honestly. Again, then you get this bullish signal here. You got this arrow here. You got a ratio. You got this imbalance here, and it can't muster anything. It just sort of goes sideways on you, and it's just going sideways most of the morning. This is 8:46 here, and look at this from 109.35 basically to 109.48 is your range for about 2 hours this morning, an hour and a half. Do make new lows, 9 o'clock. PMI, I believe, came out around 9. You did get a little bit of a rally. Get up here, point of control up near the top. Okay, sell off. Price rejector. You start rallying back up. I didn't really want to talk about this because there really wasn't that much, juicy things to talk about. But still, you hit the swing high. You come off. Again, you start getting alternating signals. Bearish, bullish, bearish, which is also a sign of quiet market. But again, it's happening right before 1 o'clock. This is 12, quarter after 12, 12:45, 30 minutes. And I know it's in this holding pattern until the FOMC announcement comes out. And, this market you got a lot of activity as well in this market. I said, you didn't get much in the equities. But again, just to give you an idea how fast it's moving. It started about a minute actually before the FOMC came out. But 1 o'clock here, you're trading 38. You trade all the way down to 28, all the way back up to 48, and you can just see how fast it is. It's 13:00 in 1 second, 4 seconds, 7 seconds, 12 seconds, 15, 18, 23, 31, etc., etc. It's moving pretty fast there. And just again, we're still moving in this fast market. This market move much quicker than the equities. So you're coming down, into these lows here, just after 1 o'clock, 1:10. You got a price rejector. You've got the this is the price trajectory. You got the delta scalper giving buys, and it just gets slammed back down into new lows. Then down here you got the delta surge, gives another buy, slam back down into lows. Here's price delta scalper, but it's on a red bar. Again, you just keep getting slammed into these lows. So again, it's still, it's after 1 o'clock. Again, if there's certain days of the month to not be trading, days honestly that I stay away from. FOMC days is one. Non-farm payrolls is another. Obviously, elections. Yeah, you can make shitloads of money if you're positioned right on those days, but you could also lose a bunch of money on days like that you're wrong. So, is it worth it? Ask yourself. I know my trading. It's just better for me to stay on the side. You don't have to trade every single day. I'd rather trade when everyone talks about having an edge in the market. And I'd rather trade under normal conditions where I have an edge rather than volatile conditions where I may have an edge, but the market's moving too fast to take advantage of it. So anyway, that is it for today. So thanks for watching this. To learn more about order flow trading and software that I use in this presentation, visit orderflows.com. And thanks for watching this. Bye bye.